Okay, so previously we discussed about Section 29, improperly accumulated earnings tax. Now we'll go to Section 30. Section 30 is all about exemption of certain corporations from income tax. You just familiarize yourselves with the enumeration, but you have to memorize or understand. Okay, it's better. You have to understand the import of the last paragraph. Let's go there. This one. The idea of the this last paragraph class is that if this corporation uses their properties, real or personal, or if any of their activities is conducted for profit, regardless of the disposition made of such income, then that property or that activity is subject to tax, so long as it is conducted for profit. Now, there are two cases that I would like to discuss. It involves Section 30 E, G, and paragraph this one H, non-stock, non-profit education. You remember the St. Luke's and the recent one, the De La Salle case. So let's go first to St. Luke's. St. Luke's was, you remember, they were assessed by the BIR for their income taxes, and they said that we should not pay tax because we belong to charitable institution as defined or as provided or as enumerated in Section 30E, so that we should not pay income tax. The Supreme Court said for a charitable to be included in Section 30E, it should be organized as a non-stock corporation or association, and it should be organized exclusively for charitable purposes, and it should be operated exclusively for charitable purposes, and no part of its net income or assets shall belong to or inure to the benefit of any member, organizer, officer, or any specific person. Thus, as stated here, the organization must be organized exclusively for charitable purposes and operated exclusively for charitable purposes. What's our basis? So let's go to E. Non-stock corporation or association organized and operated exclusively for religious, charitable, scientific, etc., etc. So this is the keyword. These are the keywords here: organized and operated exclusively, because that's how the law defines a charitable institution or religious or scientific to be non-taxable. Okay? Now, in the case of De La Salle, because they are paying or they accept paying customers or patients, diba, you remember the joke that I will not tell that anymore when here, because, well, let's go to the lessons class. But the idea here is that this De La Salle said we are not supposed to pay taxes, but the Supreme Court, okay, were you organized exclusively for charitable purposes, and are you operating exclusively for charitable purposes? The Saint Luke's, not De La Salle, I'm sorry, Saint Luke said, okay, we accept paying customers. So the Supreme Court said, then you do not belong to Section 30E, because Section 30E, for you to belong there, you should be organized and operating. You should be operating exclusively for charitable purposes. Okay? And Section 28.3, this pertains to charitable institution, but this just defines the tax exemption of a charitable institution from paying, or the exemption from real property taxation. Those properties which are actually directly and exclusively used for charitable purposes. But then again, the properties of De La Salle is not actually directly and exclusively used. But there may be some properties that are, because in the case there were sections there that were charitable, etc. They do not, but there are properties. So I think there's a case in point, the Lung Center of the Philippines. This was this was discussed there, the real property taxation. But for purposes of our lecture here, we'll just focus on the case of St. Luke's and De La Salle. And the last paragraph of Section 30 qualifies the words organized and exclusively or operated exclusively by providing that this one, as I've said, you must understand that. So in short, the last paragraph of Section 30 provides that if a tax-exempt charitable institution conducts any activity for profit, such activity is not tax-exempt, even as its not-for-profit activities remain tax-exempt. Okay? So, thus, even if the charitable institution must be organized and operated exclusively for charitable purposes, it is nevertheless allowed to engage in activities conducted for profit, without losing its tax-exempt status for its non-profit activities. The only consequence is that the income of whatever kind and character of a charitable institution from any of its activities conducted for profit, regardless of the disposition of such income, shall be subject to tax prior to the introduction of Section 27B. The tax rate on such income from for-profit activities was ordinary corporate rate under Section 27A. With the introduction of Section 27B, the tax rate is now 10%. So, the St. Luke's here, I will repeat, is not considered to be operating exclusively and not organized exclusively for charitable purposes, such that the activities that were conducted for profit, then they would be taxed. At what rate? At 10%, because they belong to Section 27B. Okay, the preferential tax rate for proprietary educational institution and proprietary hospitals. So you just remember, if the corporations listed here conducts their profit or their activities for profit, then the income of that activity should be taxed, even if they are ordinarily tax exempt. Okay, but there's a case, an interesting case, class, about De La Salle. You remember De La Salle, which I discussed in the constitutional limitations, the video lectures. De La Salle, what is that all about? Again, I will mention here that this is, well, we'll just discuss because there are 3 GR numbers here, but we'll discuss about the Section 30. The De La Salle was assessed for so much tax deficiency because the BIR wanted to tax them on the buildings or the income from the real properties that they leased out to whoever. And the De La Salle said, well, we are as provided under Article 14 of the Constitution, particularly paragraph or Section 4, paragraph 3, we are exempted from paying taxes and duties because of the word all revenues and assets. And the BIR said, no, that provision or Section 30 qualifies that provision, said. How did the Supreme Court rule on that? Because the last paragraph of Section 30, regardless of the disposition of that income, okay? So, the BIR said, you should be taxed because even if you belong to Section 30H, non-stock and non-profit education institution, under Section 30, last paragraph, if you conduct or if you use your property, real or personal, for profit, or if your activity is conducted for profit, then you should be taxed. That's Section 30, last paragraph. The Supreme Court ruled that the 1997 tax code did not qualify the tax exemption constitutionally granted to non-stock, non-profit educational institutions. Why? Because, well, the basic is that a statute can never prevail over a constitutional provision. Okay? So the Supreme Court said here that regardless if De La Salle uses that for profit or not, the idea there is it proves that the property was used actually, directly, and exclusively for educational purposes, then that should be taxed. Now, the Supreme Court, or then that should not be taxed, okay, because of the constitutional provision. So the Supreme Court said, thus, when a non-stock, non-profit educational institution proves that it uses its revenues actually, directly, and exclusively for educational purposes, it shall be exempted from income tax, VAT, and local business tax. On the other hand, when it also shows that it uses its assets in the form of real property for educational purposes, it shall be exempted also from real property tax. To be clear, proving the actual use of the taxable item will result in an exemption, but the specific tax from which the entity shall be exempted from shall depend on whether the item is an item of revenue or asset. To illustrate, if a university leases a portion of its school building to a bookstore or cafeteria, then the lease portion is not actually directly and exclusively used for educational purposes, even if the bookstore or canteen caters only to university students, faculty, and staff. The lease portion of the building may be subject to real property tax. Okay? We ruled in that case, or in Abra Valley College versus Aquino, we ruled in that case that the test of exemption from taxation is the use of the property for purposes mentioned in the Constitution. We also held that the exemption extends to facilities which are incidental to and reasonably necessary for the accomplishment of the main purposes. In concrete terms, the lease portion of a school building for commercial purposes, removes such assets from property tax exemption granted under the Constitution. There is no exemption because the asset is not actually, directly, and exclusively for educational purposes. The commercial use of the property is also not incidental to and reasonably necessary for the accomplishment of the main purpose of a university, which is to educate its students. However, if the university actually, directly, and exclusively uses for educational purposes the revenues earned from the lease of its school building, the example there, the revenue from the lease, such revenues shall be exempt from taxes and duties. The tax exemption no longer hinges on the use of the asset from which the revenues were earned, but on the actual, direct, and exclusive use of the revenues for educational purposes. Obviously, because, there's this building, and a portion of the building was leased out to, say, a cafeteria, then the portion of that would be subjected to real property tax, as explained, right? But the income or the rent that the university gets from the cafeteria, because it uses that for, it actually directly and exclusively use that for educational purposes, then that would be not subject to tax. Okay? I hope you get it, because as the Supreme Court defined or discussed the taxation of revenues and the taxation of assets. Non-profit educational institutions or non-stock non-profit educational institutions are exempt from both real property tax and income taxes, whatever taxes, duties, because of the constitutional provision, section or Article 14, Section 4, Paragraph 3. But they have to prove that the asset is actually directly and exclusively used for educational purposes, and the revenue, its revenue is actually directly and exclusively used for charitable purposes. But in this case, the BIR said no, because, you have to pay because of the last paragraph of section 30. So the Supreme Court said, we declare that the last paragraph of section 30 of the tax code without force and effect for being contrary to the Constitution, insofar as it subjects to tax the income and revenues of non-stock, non-profit educational institutions actually, directly, and exclusively used for educational purpose. Okay? But they made a caveat that the other provisions or the other corporations, the last paragraph of section 30 still applies to them. Okay? The last paragraph of section 30 was declared to be unconstitutional insofar as non-stock, non-profit educational institution is concerned, so long as it uses the revenue or the asset actually directly and exclusively for educational purpose. Now, you might be asked in the bar, you might be asked, to compare between the proprietary educational institution and the non-stock, non-profit educational institution. What are their tax incidents? Okay? How are they liable for taxes? Well, under Section 27B, the proprietary educational institution are just given what? Preferential tax rate at 10%. And they may even be subject to the 30% corporate income tax if the earned income or the unrelated business is more than the 50% of what they earn. Okay? But for non-stock, non-profit educational institutions, they are actually exempt both from real property tax and income tax, VAT, and local business tax, so long as they prove that the asset or the revenue are exclusively, directly, and actually used for educational purposes. Okay? And you might be asked of the St. Luke's about the charitable, when can a charitable institution be tax exempt on income tax? Because a charitable institution, if you operate that exclusively for charitable institution, the company or the entity that you have, it's provided by the Constitution that they are exempt from what? Real property tax. For those assets which they use actually directly and exclusively for charitable purposes. But for their income, they are actually taxable. Okay, this is charitable institution class. They are actually taxable if they use their asset or they conduct any activity for profit, regardless of the disposition of their income, then they should be taxed. I repeat, only non-stock, non-profit educational institutions are completely exempt from both real property taxation and income taxation, VAT, all the other duties and taxes, provided that they prove that the assets and the revenues are used exclusively, directly, and actually for educational purposes. So, you just read De La Salle, St. Luke's, and maybe the Lang Center case. I have an inkling that maybe not the problem, or not the case, but the examiner might want to know if you have the idea about the distinction among the three: non-stock, non-profit educational institution, the proprietary educational institution, the hospital, etc., 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 in relation to the constitutional provision, Article 14, Section 4, Paragraph 3, and Section 28, Article 6, and Section 30, last paragraph of the NIRC. And you must be able to discuss the nuances of the provisions class. Okay? So, that's about it for Section 30. And I hope you have an idea now. I'm sure you do. This is just the review, just to emphasize the three cases that might be asked in the bar. Okay? So that's it for Section 30. Next, we will discuss Section 32. This is all about the gross income. Okay?